Hi, I'm Jaqueline P'ng and this is Making the Call. Earnings season is over, and while it wasn't a disaster, many had hoped for better. Hong Leong's verdict, disappointing, and for the 18th consecutive quarter too. It's expected 2015 EPS to shrink by 2.4% and 2016 EPS by 6%. Still, it's taking heart from several encouraging factors that could signal gradual improvement ahead. Fewer stocks and sectors disappointed, the EPS growth revision wasn't as drastic as before, and more importantly, the earnings revision ratio has improved. Hong Leong is maintaining its year-end target for the FBMKLCI at 1,710 points. That's 15.5 times 2016 earnings. The research house also named some of its top picks. It's sticking to its focus theme, the first being big caps with attractive valuations. On this list, we've got Axiata. Its latest quarterly earnings was up 40%. IJM also reported a 40% improvement quarter-on-quarter, while Maybank saw improving bottom lines in a quarter that saw most other banks foundering. TNB didn't fare quite as well, but it failed to buy 1MDB's energy assets, and that's got investors relieved. Hong Leong also picked out several other counters which it feels will benefit from the 11 Malaysia plan rollout and the signing of the TPPA. IJM is also on the list. The rest are UEM Agenta, which has said it's eyeing infrastructure jobs under the 11MP. Mitrajaya is expected to be a strong contender for jobs related to LRT3. Sarawak Cables also here, and there's also Westports, which stands to gain if Malaysia ends up signing the TPPA. The Peterson Institute of Economics has said the country could see an increase in exports of over $41.7 billion should it sign the Pacific Rim deal. Now here's what Public Investment Bank has to say in the report card. It's blaming weakened consumption spending, and while it had expected the worst to be over in the last reporting quarter, there was just more of the same this time around. Public says it's encouraged that nearly 60% of the stocks it covered either met or exceeded earnings expectations, but there's still the 40% that missed. Year-end target for 2015 remains unchanged at 1,740 points. Public Bank has flagged 3 big cap stocks it thinks are worth investing in, and CIMB is one of them. Despite recording lower net profit, operating income was higher, a sign that its recalibration plan is on track. Genting is up there too, with earnings up by a marginal 2.4% on forex gains. So is Malakoff, which reported a 44% jump in third quarter net profit. As for small and mid caps, Public likes Tan An, which saw third quarter core net profit skyrocketed by 147% year-on-year. SKP Resources got a new contract with Dyson worth 3 billion ringgit, while power company Mega First saw third quarter numbers lifted by weak ringgit. Renewable energy firm Saipa Resources is also on the list. It recently secured a 25-year waste management concession from the government. And lastly, Petra Energy. Its latest quarterly earnings inched up by just under 5%. And that's all from Making the Call. I'm Jaqueline P'ng. Thank you for watching.